Glenn, you say that the money machine is like a giant John Deere harvester that harvests the fruit of the global economy. Tell me about that.
Well, there's companies all around the world, Jim. There's large companies, there's small companies, there's companies that are called growth companies that have a high stock price. There's companies that are called value companies that have a low stock price relative to their valuation. There's also bonds, everything from AAA blue chip bonds to junk bonds, kind of like the Greek bonds right now. All of these entities are producing wealth on a regular basis. They're profit-making institutions.
Okay.
The retirement money machine holds positions in 11,000 public companies in 44 countries around the world.
Wow.
And what it does is it just takes the aggregate profit from all of the global commerce as its profit every year. There's a measurement of the global profit. It's a fairly technical term. It's called the global capital market rate of return.
Okay.
That's an actual number that can be identified every year, and the purpose of the retirement money machine is to capture that global capital market rate of return every year.
I see. Okay. So harvesting the global market return is a good thing.
Well, yes, Jim. If an investor could capture the global capital market rate of return on a regular basis, they would meet pretty much every definition of being a successful investor. Because if you think about it, all of these companies around the world are in business to make money. And over time, they have. There's been no greater wealth-creating system in the world than the global stock market. The retirement money machine takes advantage of that fact and captures the global capital market rate of return.
So what I hear you saying is that if I set up my retirement around this money machine to capture the global market return, then I have the potential of retiring and not outliving my money. Is that what I hear you saying?
Yeah, absolutely. Of course, there's no guarantees, Jim. You know, even the financial scientists and Nobel Prize-winning people who have put together the research that's in the retirement money machine, they can't predict the future.
Okay.
So there are no guarantees. There's two elements. There's the generation of money to have a successful retirement, and then there's what I call the personal behavior element. The personal behavior element is the taxes that you pay, your personal expenses that you have, how much money you need, how much money you have, what your fixed expenses are, how much health care is going to cost you. So the retirement money machine kind of does the heavy lifting on the asset management side.
I see. Well, who does the heavy lifting on the personal behavior side?
Well, that's a combination of my role as my client's financial coach, and of course my clients becoming educated and understanding how best to not outlive their money. It's again two parts. The first part is having a long-term wealth creation machine, the retirement money machine. The other part is personal behavior issues. Don't go crazy spending your money. You know, if there's good years, you can spend a little more. If there's bad years, you'll have to spend a little bit less. I'm the guy, as the client's financial coach, that sets up the money market machine, maintains it, makes sure it works the way it's supposed to work, but most importantly, I'm the financial coach for my clients, and I help guide them through the economic challenges they're facing in several decades of retirement.
You use an interesting term, the analogy of being a coach. What qualifies you to be a financial coach?
Well, Jim, I've got 38 years in the financial service business. I started in 1973 in New York City with Much Fun Life Insurance Company. And in 1983, I set up my own firm. And back then, I identified the senior market, people ages 50 plus, who at that time were greatly underserved with financial products. So I've made it my profession, my life's passion, to come up with the solutions that retirees and people who want to retire need to retire comfortably and not outlive their money. I've had over 3,000 clients in the years that I've been working. Most of them have been with me for over 20 years. Quite frankly, when I got them, they were 60 or 70 years old. Now they're 80 or 90, even 100 years old. And I'm looking to pick up probably another 100 clients and work with them as their financial coach.
I see. A discomfort that I have with the market currently, Glenn, is that I just don't like the Wall Street guys. What separates you or makes you different than the Wall Street guys?
Well, Jim, there's a lot of reasons why I'm different from the Wall Street guys, and I think on the next video, I'll kind of get into that and tell you exactly why I feel that way.